Welcome to Momentum Monday. Today is February 28, 2021. We have another special guest today, Zor Fahmy from Zor Capital.
You know, Ivan, it's fucking Joe Fahmy. It's not, you say it like it's like this is like just like a.
Everyone knows him, yeah, I know.
This is a celebrity. He's wearing his mock Tiger Woods watermelon turtleneck. I think he's got Joe. He dressed up. I mean, it's a perfect contrast for your background, Joe baby. So this is one of my oldest Twitter friends, and we've got people from all over the world. We've got an Egyptian, Joe Fahmy. We've got a Jew from Toronto, and we've got a Bulgarian. And it looks like Ivan is coming live from a grave tonight, like a grave site. It's so dark in there, Joe.
Howard, you're the reason I started my blog. You know, not too many people know that.
Well, I apologize again. How many times must I apologize?
So much love for that.
Is it because of me or because of Phil or what? Give everybody a little background.
You know, Chris Brogan connected me to you, and you connected me to Phil.
And so, who do you hold most accountable for your misery? Because no one is funnier. I'll tell you what, Douglas the Boner Bonaparte is a funny kid. He's great hair too. Kind of why I don't like him. He has good hair and he's funny. But I
have no hair and I'm kind of funny.
You're the funniest guy I know. Your tweets are hysterical. Pound for pound.
I don't know about pound for pound.
Pound for pound, you knock it out of the park, man. Tweet for tweet, you've got it going on. You're very easily offended, though. You're a very sensitive human being. People should know that. So please, unless you have something nice to say, don't say it. And you are of Egyptian heritage?
Yes. Half Egyptian, half German Shepherd.
And so your favorite.
It's a very loyal mix.
And you and I have had some food. I mean, we go way back. We've had food all around Vegas, not around. We
had great falafel together in New York. We've had great sushi in Vegas and coffee in Coronado.
Coffee and Coronado. We've traveled the world together. If the world is three places, we've traveled the world. By the way, there's a lot of casinos that act like they're the world in Vegas. So you kind of have traveled the world if you spent a night in Vegas.
Yeah, we've been to Paris. We've been to New York.
So anyways, Joe is like us, a momentum person. Joe and I have IBD. We like trends. We like momentum. Have you ever seen since March? First of all, how's life? Where are you today?
Things are good. Things are good. Still on the East Coast and thinking about moving to Florida soon. So we'll see.
Do it.
That's what I'm leaning. I feel like everyone from New York that I know has moved down to Florida, so I might be down. I might be following.
As soon as New York, they'll all come back and keep their place in Florida and go. Why would I? I'm bored. I'm tired of old people. The mosquitoes, the wind, the humidity. I mean, humidity won't bother you. You got nothing to sweat. You can't sweat. Just your forehead. You wipe it down. You carry like a. What's his name? You carry a Giuliani napkin and you're fine.
Oh yeah, and then when I color my hair, it'll just drip down the side of my face.
So Joe can be found at what's your web? Oh, right there, joefahmy.com. And one of my fave follows. And so Ivan, let's talk about the market. We're here, Joe. We do our Momentum Monday, which is right up your alley. We're going to let you run today's show mostly. Ivan and you will run the show. So Ivan, take us through the indexes. Joe's familiar with IBD. He's a Marcus Smith maven himself. So Ivan, let's talk about where we're at and then we'll give Joe the mic.
Yeah, sure. So basically in the past week, we definitely saw some form of sector rotation. All the so-called back to normal recovery stocks were strong. We're talking airlines, leisure, casinos, hotels. There were positive money flows in those. In the meantime, all the mega caps, especially technology stocks, have been showing relative weakness as of late. As you can see, the relative strength line of the Nasdaq 100 has dropped to 56. It closed below its 50-day moving average for the first time in a long time, basically since October, November of last year. So definitely we're seeing some shifts.
And some nasty volume on the downside for the first time.
Yeah, you can say so. Obviously when the market goes down, typically volumes picks up.
Okay, this is what I deal with, Joe. He's just sarcastic, this guy. Like a dry, it's like a man under the sea. Obviously. Every time I say something, he goes, obviously, you're an idiot. So the blue bars, yeah. And so what's interesting, I'll just quickly say that like my fresh ideas are not working. Like eBay looked beautiful, just gave up the ghost, and I don't like seeing good ideas that I have. Just look how beautiful that setup was a couple of weeks ago, and poof.
I know there was a few of them. There were a few of them that were like that.
Right, and that's what scares me about a market. Like I'm always probing. I'm trying to add new ideas because I'm a conservative ninny, and because we're late, we depends who you ask, but these are late stage, many breakouts on top of breakouts. So when they fail, you got to be careful. I'm trying to think what other one of mine failed. My only idea that was new of recent that worked is Twitter, and it still remains like the hot.
Yeah.
Have you been in it the whole time, Howard?
I've been in it, and I'm generally terrible at it, but for the last 20 points, I've been in it. Not a huge position. But I just felt with Trump, I had this weird, not technical, Joe, but this, as soon as they kick Trump off, it would be good for the stock. And
that's a great contrarian play, because everybody said when he gets off, it's going to kill Twitter. And they were, again, when the majority thinks one way, it's usually wrong.
And it's also, Joe, he was bad for the brand because it's a platform. It's not a media company. Now, I don't care what you call it, but I mean, it's now acting better like a platform. You go to the trending page, and at least there's new news. It's not like Trump farted and Trump hates this guy.
Some of those hashtags were pretty funny, but yeah. I know what you mean.
So Joe, what are you focused on right now? Because you're nimble. So what do you see? And I can pull up charts, and
I see. I think the software trade, I love it longer term, but it's became overcrowded and needs a little bit of a rest to reset. Mm-hmm. Same thing with I love Amazon. I mean, I'm bad mouthing these companies, but everyone hated Amazon at 300. They hated it at 700. They hated it at 2,000. Then they fall in love with it, and it's done nothing for the last 6 months. Yeah. So, I mean, you remember literally for the last 3,000 points, everyone's hated Amazon. It was overvalued. So that just plays more into, not picking on Amazon, it plays more into the psychology of, when everyone finally throws in the towel, then the stocks tend to stall out and shake out the weak hands. As Ivan said, there's a lot of rotation. The IBD top sector groups are into the opening up the economy stocks, like Expedia's at a new high.
Oh, Expedia. So Expedia, good call. And I was looking at one that I added that's working is MMYT, which is the India version of Priceline. And it's been a harrowing idea over the years for me, betting on India. And now when you would not think it's breaking out, I've been ahead of Travel. Okay, Travelzoo was like a fake company, but MMYT.
BKNG is a great, the old Priceline booking. Yeah. That's a great breaking out of like a big 2-3 year base. I mean, so, one thing people need to remember is that the sectors shift all the time. So I've been mostly the last 6 to 9 months in semi, software, some of those mega caps. I still like some semis, and I'm not throwing out those sectors. I'm just saying you can't be overly, too married to them, because you got to keep in mind some of those stocks had 2, 3, 4, 500% moves last year. Your DocuSigns and Zooms and all great companies, but they've already had such huge runs that they might be priced in, and it might be time for them to reset, put in new bases technically, while surprisingly on the IBD list are not only opening up the economy stocks. Energy is like 5 or 6 of the 197 industry.
Will you touch those just because you can? So will you trade energy? I can't even get my head around stuff. So I'll just, if it's not a growth story that I understand, I'm just on the sidelines. Will you dabble in these?
I will. I traded energy a lot more in 07 and 08 because oil went from 50 to 150. A lot of the analysts had their estimates way off because they weren't really prepared for a big move. But lately I have not been. They've been showing up on my screens, but I'm with you. I can't really, I think I traded a lot of commodities in 07, 08, the fertilizers and steels and oil services, because that was where the growth was. But now I don't think oil, I'm surprised it's actually stabilized above 60. I just can't really see it going much higher. I don't know. Because then the US fracking and all that becomes competition with you know, the Persian Gulf oil, and then the Saudis cut supply. And, you know, I feel like there's too many games going on with the price of oil, so I just avoid it.
And you're not necessarily a fundamental guy. So is there anything that stands out to you? I mean, semis you nailed. I miss semis because I always saw them as cyclical and they became growth companies. So I missed the whole idea of it. And so is there a story stock or something that you just love, but that you feel like catalyst and technicals align right now, or you're just kind of like wary of the moves we've had?
Right now, I'm sort of like 50-50. We've had to pull back the last couple of weeks. Growth definitely got hit. I just like to be a little bit defensive when you can make a case either way. I'm not trying to be, you know, indecisive. There are times when we're in a clear uptrend, and there's times when we're in a clear downtrend. But when the picture's a little bit mixed, I just get a little bit defensive. So I just wait patiently for some better setups. I mean, Ivan screens a lot. I'm sure you could kind of, you know,
He's
add
ripping
a
up.
little bit.
This ARK Innovation thing was the first break of a short-term downtrend, just once you got her 50 billion. So Ivan, anything that excites you here, or you just kind of watch?
Last week was definitely very tough on momentum stocks. So that's why I pulled up the ARK Innovation, also the other ETF momentum, and also the clean energy ETFs, also big breakdowns. I mean, in the past couple of weeks, I started to see a lot of interesting ideas on the short side, so, you know, which I typically don't really pay much attention to, but all those stocks that went up so much in the past 3 to 9 months, many of them are starting to break down and just offer better risk to reward ratio on the short side. And on the long side, there are fewer and fewer setups, at least on a short-term swing trading perspective.
Right. I agree with Ivan. I think that it can change quickly. So you got to stay on top of things and keep a watch list of things that held up well, like InMode. INMD is one I own, and I like longer term. And when you look at this,
InMode is an
Israeli company. I mean, look at the earnings down at the bottom, 2 huge quarters of earnings and sales growth, great technicals, held up very well, great story. I like this one longer term. I was talking about this and tweeting about it in the 40s. And I still have a position. So yeah, there's still some like medical products that I do like, medical equipment, because I think that's going to continue to be a strong area.
IHI is an ETF that I just own in my 8 to 80, and it's held up well. But again,
which one?
What IHI? But it's breaking down now. It's a medical device ETF.
Oh, okay. Yeah, I've seen that one. Yeah.
Yeah.
So I think, like Ivan said, from a short-term swing perspective, you got to wait a little bit, but keep a watch list and don't get too negative. You still have the Fed on our side, and people get negative very, very quickly. Sentiment
so quickly, right? Like people are so negative so fast.
Sentiment went from like equity put to call went from a really low number like Monday or Tuesday of last week to the highest since the end of October on Friday. It's not extremely bearish, but to the point, maybe Howard, you can comment on this. Like I noticed sentiment at least in the older days, I'm not that old, but shifted in 2 to 3 weeks or 2 to 3 months. I feel like it's literally shifting in 2 to 3 days.
Yeah, and I think it's options. These kids are trading short-term options. They're moving the market, actually. They don't really care. I think what's so unique about this market environment, and maybe it's just because of rates, and we'll watch rates for the institutional money, but like they'll just do YOLOs and they don't care what the market's doing, right? There's a lot of non-correlated moves in stocks right now, which is fun, like for a good trader, but I still like to think about, you know, full exposure and percentage of portfolio exposed. And I'm a little bit wary right here. For a couple of weeks, I've been wary. I dabbled in, you know, I felt Zoom was coming out of they're breaking out, and it gave right back, you know, and then like the eBay trade gave it right back. And, you know, Goldman Sachs, which I'm long, which I hate being long, had a nasty reversal, but still like such a strong looking base. So there's some great, you know, these financials look phenomenal, right? The yield curve is working in its favor. And
Howard, you're strong with the trends. What are you know, you've been ridden some great ones for a while. Like, what are you obviously know software way better than I do. Like, what are you, what are your fields?
I think it's been fintech, and you're seeing it now, but you're starting to see the pullback. Look at Square, pulled back hard, you know, even though,
I mean, it made a huge run in the last year.
But I'm saying it's it gave back 3 months of gains like so quickly not that you should worry, but I mean, I guess at 200, I'd start maybe looking at, but I'm not a Square fan, right? And meaning, but the Visa, MasterCard is what I would say was breaking out, which is kind of tied to the opening play, and that had been kind of going sideways for a year and a half. So I guess that's a fintech play on the reopening, even though it's tied to e-commerce too. Obviously, the Goldman Sachs is a new idea. Twitter is, a relative value growth. I don't think it's growing. And then Shopify, I've been pulling up all my favorites. Shopify, again, broke out and kind of given back most of the gains. Where's Shopify? Melly, Ivan's quick tonight. So it feels like we're a little bit in short-term no man's land. If you've been riding these trends, you got to stick with it. Like this is just a blip, but could turn into more of a problem if rates continue to, Ivan was pulling up the 10-year, Ivan, you were above 2%.
Long-term treasuries, so it's not 10, it's 20 plus.
Yeah. So Ivan and JC and technical people are worried about this 2%. Even Fred Wilson had commented, if the 10-year gets above 2%, people will start kind of readjusting.
Yeah, I mean, they say 1.5 becomes competition for the S&P yield, but I think it was more the velocity of the move. I don't know. Maybe I'm just stubborn, but who's in the market for 1.5% anyways?
Not us. But like we said, we don't want to fight. We've had such a great run. You don't want to just buy the first dip. I'd rather buy strength, a reassertion of strength, than this type of dip, no man's dip here.
I agree. I think some stocks just need to reset. Yeah, like the ones we talked about, the DocuSign, the Squares. They just need to reset. We're in no man's land. It could be the left side if a base is, the letter U, or it could be the left side of the U being formed. And I think you're right. We're in no man's land. Earnings, for the most part, I think 90% of S&P companies have reported already. So the third month of the quarter tends to be the news shifts from fundamentals to the geopolitical BS, instead of like, oh, what's Apple, what's Amazon doing with fundamental news. It tends to shift a little bit until April, when things hopefully maybe we'll set up by then.
Yeah, nothing would surprise me. It's just my thing is when I probe and I'm wrong, I don't double down. I retreat. And eBay's forced me into quick retreat, even though it wasn't it's just probing to see if I can put more money to work. But like the Etsy of the world, like even though eBay didn't work, Etsy blew it away, right? So it's just like there's some stock picking matters, and buying the laggards like me doing eBay, it did not work. It's not like I have some edge on eBay. And we're trading at such high, lofty valuations that you really have to, if you're gonna probe, you have to be willing to retreat. And if you're in big trends, you can't be scared out of 3% index moves. And the fact that Ivan is seeing more short setups is just more proof that I don't want to go short, but it's just more proof that smart traders are looking to win on both sides right now. So the long trades won't be as easy. And if we shoot straight up, there'll be tons of setups again. So it's one of those weird weeks where I invited you on, but there's not that much to say other than when three guys who both all do the same thing are saying the same thing, that's generally, time to just build a watch list. Like I can't get into Royal Caribbean Cruise Line here that I'm never going to consider it's a growth story for Petri dishes, but it's not a growth story that I'll ever participate in. Because I don't believe in it.
So just go long in case the vaccine works. I don't know.
No, but if the vaccine works, there's going to be lots of plays that I can actually understand.
True.
Yeah, and the vaccine is working.
And Visa are easier to understand because more people will go out and spend in restaurants, etc.
Yeah, so I try and pick ideas that just make sense to me. Obviously, Moderna came out with some malaria thing. And so if you pull back Moderna this weekend now, it's big news, right? That they're now working on a malaria vaccine. The other big news is the what is it, the $2 trillion? So we'll see how the market reacts, knowing that the $2 trillion is getting closer to being approved. Like say that gets approved and stocks don't sell and don't, rally, that may mean we're in for more of a correction. So I think this is a big week to watch the tape.
Yeah, no, I mean, we're right at that 50-day on the NASDAQ, S&P, right there where sometimes, it's not an exact science line, but it's a good guideline to see if we maybe bounce, from it, or if we break down below it. So I think you're right. It's going to be a very interesting thing to see. One thing I wanted to ask you about is I love like the concept of what Cathie Wood did last year. I mean, don't you think that's just like her transparency and what she did just sort of has like rattled the industry in the sense of, the traditional ETFs and mutual funds?
Ivan?
I mean, definitely, if you look at the money flow into her funds, definitely impressive. And she's moving stock right now. She's an opinion leader. And she did something that many of us thought that it was hard, create an actively traded ETF and make it a really profitable enterprise. And she's done really well by holding, stocks for multiple weeks. So
yeah, I'm a huge fan just because she's put her chin out there to get punched. She's going to get punched.
Oh, no, she'll have a drawdown for sure.
Yeah.
I like three things that come to my mind of what she did. Number one is the way to beat the market is concentration.
Yes.
I talked to so many people that own 50, 100, 200 stocks, a bunch of mutual funds, which in every one of those mutual funds, they own 137 stocks. They might as well just own the S&P because they're just over diversified.
Correct.
So a lot of people really don't understand the way to beat the market is concentration, a good group of 8 to 12, maybe 20 max. I think William O'Neill says after 20 stocks is perfect diversification. So that's number one. Number two is the clear thing, which is you have to still pick the right stocks.
Mm-hmm.
And she was phenomenal in doing that. The third one I think is the hardest, which is sticking with those names.
Yeah.
Because she basically, I think, has a max position of 10% is her max position, which she had in the ARC Innovation one in Tesla. And so she not only was concentrated, number one, picked the right stock, but to hold a 10% position or max position for an 800% move, I applaud anyone who has.
Joe, we talk about this all the time, you and I. The reason I was successful, better success, other than with my own money, not managing other people's money in the private markets, is I maxed out a 20 position. Each fund was 20 positions. Doesn't matter what the price is, whether it was Robinhood or eToro, the winners I had to hold. And which is the hardest thing to do in the public market. Listening to the media talk about how overvalued your stock is when you can sell it the next day that's her genius, is to be able to ride a public liquid growth stock through what Tesla did is why people have done this, because the average person can't do that.
That's what I'm saying.
Myself
included. I think
included.
You do a great job of keeping it focused. You've ridden, the Nikes, the Googles, those trends pretty well. I'm impressed with anyone who can do that. I wish I had the ability to do that better.
But you're a swing trader, and this is a momentum show, so Ivan's a swing trader. I adjusted my lifestyle and my business to help me be a better investor. And the only way I could do that is in the private markets. I'm now, more of a crossover because I've learned how to ride trends better and to block out some of the noise. And but at the same time, when you hear the drumbeat of overvaluation all these years and you have the opportunity to sell every day, this is exactly why Cathie did it, is what you said. And not everybody can do that. Trust me, it's just not that easy. And that's why she's rich, and that's why people like her. I find it's just too much information coming out of her, but I get why she's doing it. She's controlling the narrative. She's become a media company on top of being a financial company, which is really a powerful thing to do. Her YouTube videos get so much play, and we know how hard it is to get traffic. So it's just amazing how big a brand she's gotten. So it's kind of a self-fulfilling prophecy. As we've seen, this will unwind awful. And her biggest loss was she will lose more money than she ever made for people on this next wave down, because all this money plowed in. And so the way this always ends is in tears.
She'll have a bigger drawdown than people think that she will.
No, and she'll lose more money than she ever made on this drawdown because all this money came into her.
Because they plow in at the top. It's classic psychology. That's why they have the disclaimer, past performance isn't, because people are monkeys and chase performance.
Yeah. And so
Ivan, pull up CGMFX, Ken Hebner's CGM Focus Fund.
Sure. Just real quick, also another thing, notice how for 2 years, 2018, 2019, ARKK didn't do anything. I mean, it underperformed the market. It was sitting below the...
And even harder, Ivan, is that breakout in 20 that just took her into a huge drawdown, and she didn't flinch, which is pretty amazing. And look at that drawdown. She had a 50% drawdown and just came out of it like a beauty. You're right. I mean, the market just is evil. So she's getting paid for sticking with her things, and that's how you win. Now keeping your clients through that is the hard part. So you know what I mean, Joe? Like that's.
I agree 100%. I agree 100%.
So, Ivan, what were you saying?
No, I was asking Joe for the ticker because.
CGM FX. It's Ken Hebner's CGM Focus Fund. It's a mutual fund.
Okay.
And go look at a monthly chart. He was in 2007. The S&P was up 3.5%. He was up 80%. He was the Cathie Wood of that year because
good point.
He was concentrated in when oil went up. The guy admits he doesn't understand technology that great, but he's phenomenal on industrials, financials, and the old school economy stocks. He rode all of those commodity stocks. When the S&P was up 3.5, he was up 80. And he went from 2 billion to 10 billion under management because, and I love Ken Hebner, I'm just giving the analogy.
Yeah, I know, it was great.
Because he was on the cover of Forbes and Fortune as the investor of the year. And everyone plowed into his mutual fund. He went from 2 to 10 billion and had a 65% drawdown.
And he's been in this space. Yeah, I tell you what, if we're going to go into a commodity boom, you bet on a guy like this because he knows how to ride it.
Oh, he's a phenomenal manager, and he's had a great long-term track record. But I'm just making the analogy of it's amazing to be in the right place at the right time. And unfortunately, you're right, Howard, that people tend to they get too top-heavy. They put too much money in at the top. And then it ends up losing a lot of people money because they chase that performance.
No, but you just help me. If I don't know how to ride this commodity trend, I might just put some money with him, because if we're going into a commodity super cycle, which a lot of smart people who have been wrong for a while are saying is due, then he's the guy that could ride it for you. So that's interesting.
Yeah, and Druckenmiller has said that too. He says we might be in he's talked about recently commodities that he's shifted into.
Okay, so that is a great story of how this works. Even Peter Thiel, when he had Clarium Capital, he went from 2 billion to 9 billion. He had crazy returns and then had to shut his fund because all the money was lost. He had an 80% drawdown and then the high water mark. And lucky for his Facebook investor, and he reinvented, not lucky, he's a smart guy, but he shut down his hedge fund, did his own investing, and the rest is history. So, wow, Ken Hebner has had 10 years of hell. And probably, I wonder how much assets under management he has.
Unfortunately, he's admitted this in interviews. He just says he doesn't understand a lot of tech. So unfortunately for him, that's where, Cathie Wood, I mean, look, when Tesla before the split was 200, said it was going to 4,000, everybody laughed at her. Probably even Elon Musk would have laughed at her, but
he did. He was willing to sell his company to the Saudis at 330 or whatever.
Yeah. So my point is, like, there's another lesson here is because the sectors, like we talked about earlier, constantly shift. I don't want to say you need to be a jack of all trades, but you do need to understand a lot of different technologies and sectors because the sectors shift. So you can't just say, I'm never going to touch this sector. You have to be open-minded that could be, as we get new sectors in every cycle that lead.
Okay. That was helpful. I'm going to cut it off just because, I think we can beat a dead horse. This is great, Joe, to have you. Hopefully we can have you back.
Thanks for having me on. This is fun. I love talking markets. You know that.
And there's nothing better,
my favorite
right?
people.
There's just nothing better. And I think this Tesla chart really says it all, And again, I will end then with the Tesla comment. There was a great podcast. Galloway, as much as I'm, disagree with him all the time, he's such a great storyteller. And so he was talking about, and I really believe Apple's going to make a move into this space. He said that the thing that's going to draw Apple into cars is not that they can do it, is that there's an $800 billion valuation on Tesla. And Tesla just proved that you can't ignore this sector because it's about the software, not about the vehicle. And CarPlay is just not enough of a play for Apple. So Apple's coming into this space, even if it's through partnerships. And it was a great podcast that I'll share on my blog tomorrow with this. But he was just saying, Tesla in the end what's going to hurt Tesla is just their own success, because it's going to draw competition for this market cap. And if the market, so again, I just think, I wonder if is she selling some Tesla here, or is she still riding it?
She's been buying more.
Oh wow!
Last couple of weeks, she's been buying.
It's going to be an interesting year if Tesla doesn't work for a lot of people, and it's going to be an interesting year if it works, because it's going to draw a lot of competition from Apple into this space, whether people believe it. I think the Netflix Disney wars I got wrong too. I'm long Netflix. I kicked Disney out of my 8-80 portfolio, and Disney's pretty much doubled.
Yeah, Netflix is one of the fangs that's held up very well. I still like that one longer.
Me too, but I'm just saying Disney, I kind of gave up on it because it's diversified. So this market is it's hard. Listen, I try and tell people it's not easy, man.
It could be anticipating the parks and the theme parks, that other side of their revenue.
It's just a shit I don't want to own. I don't give a shit. Like, no different than Ken Hebner not understanding tech. I don't understand sticky kids and long lines for. And we're still waiting for you to get married. Is there anything happening on the horizon?
No, not anytime soon.
There you have it. We've got dating. How bad has COVID been for you as a single guy? You can't wait for it to be over? Or?
I have a phenomenal girlfriend, but my wife can't stand her.
This is why you kill it on Twitter. Even Ivan has worked with me for 5 years and never smiled that hard, other than that. You're killing it. Ivan's never actually laughed. Look at that smile, Ivan. Why don't you smile like that? It's just, but it's weird. Ivan doesn't smile and he's got all his hair. Joe smiles all day and has no hair. So
I know. Maybe I should stop smiling then. I think that's the correlation.
Well, you are an uncle. I'm glad that you came on today.
No, thanks for having me. I really appreciate it. It's anytime. Let me know. I'm happy to talk markets anytime.
No, I always invite people, and Ivan says, no guess. He says it in that Drago voice, no guess.
Never says that. Okay. Thank you, guys.
All right, everybody. Have a great week.
Thank you. You too.
See you, Ivan.